Well, Frank, we're back in the old spaceship.
Where do you even keep this thing when we're not using it?
Oh, don't worry about that. Just look out the window. Check it out.
It was nice of that UFO to give us the stock box.
I wish they weren't so scary when they gave it to us, but yeah, it's pretty cool.
And it's on a massive discount.
Along with everything else we sell, it's Black Friday.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, everybody. Good morning. Good afternoon. Welcome back to the live stream. Hope you're doing well wherever you are in the world. And happy Monday to you. We've got some very big stuff happening this week. I know last week was really big, probably one of the biggest weeks of the year. But this week is also pretty big as well. We have CPI, we have the producer price index, consumer price index. We also have Jerome Powell speaking this week. So it is certainly a very big week in terms of economic data. And I think the market is very, very curious to see where inflation is at currently. I mean, the thing is, the dollar index has been ripping to the upside here recently, really reversed course on this sort of very strong downtrend that we saw for several months. A couple reasons for this that we see, the dollar maintaining its strength is, U.S. economic data has come in a lot better than what was forecasted at this time. Many people have fallen to the idea or sort of fallen short on their predictions that the U.S. economy would be in a really bad spot by now. It's actually doing pretty dang good, especially when compared to peers globally. The U.S. economy continues to be, not perfect, and not everybody is, in the perfect situation. But, you look at some of the metrics that we talk so frequently about on this channel, and, you've got GDP still at 2.8%. I mean, yes, it missed the forecast for 3%, but 2.8% growth is still pretty good. I mean, you've got strong GDP growth. You've got PMIs, on the services side, which is basically asking a bunch of purchasing managers, hey, what do you think about the economy going forward? And most of them are saying that they're looking strong towards the future. So you've got some strong economic reads. Retail sales numbers, we get fresh numbers here this week. So we'll hear a little bit from the consumer on that front, right? Are people out there spending money? So there's a lot to unpack here, but overall, I would say the state of the U.S. economy is strong enough, and with rate cuts still expected, things look pretty okay, in my opinion, for stocks, which is why stocks, we take a look at them, they're trading at all-time highs, right? You've got the S&P, the NASDAQ, the Dow Jones cresting their all-time highs as we speak. And that security level is really hurting the story for gold. So I want to talk about gold. I want to talk about stocks. But for now, that U.S. economic strength and the return of Donald Trump as the president has the dollar moving higher. Why would the dollar move higher on Trump? Well, if Trump comes back in and he imposes a bunch of tariffs and, he gets the U.S. economy, going stronger than it is even, it's possible that the U.S. economy continues to really strongly outperform its peers. And that in currency land means dollar strength for the most part. That being said, Donald Trump is also a man that wants rate cuts to be happening a lot, right? He wants low interest rates, which does kind of hurt the story of the dollar. But again, the market also sort of suspects that inflation could kind of re-accelerate under Trump. A lot of people sort of speculate that the tariffs could be largely inflationary. We'll see. But the point is the market sort of sees that, and that is one of the reasons I think why the 10-year yield is trending up. This is a large contributor also to the dollar strength recently. Now, where am I in all this? Well, I think the dollar kind of continues its upward course. There's nothing here currently that tells me we need to get real bearish on the dollar. This thing looks very strong. So for me, if we get pullbacks, there's some names on the currency pair side of things that I like. But I'll tell you, one of the things that I don't like is gold. I'm just not as interested in gold as I was when we saw the dollar falling, right? When the dollar was trending back here, I was trading gold left, right, and center all day long. That was my, I was very bullish gold. Since then, I've really changed my outlook since the dollar strength is just sort of unending at this time. Gold also was thriving off the uncertainty of the election. And so for me right now, the fundamentals just don't have the same spark that they once did here this year for gold. That's not necessarily saying I think I'm just going to go get short on gold. It takes a unique scenario for me to really short gold. I don't usually short it. It's something that typically over the very long term does go up. There are windows of time where I may short gold, but it is pretty rare. I typically only like it long or I'm not trading it, right? So for me with gold, there's no trades right now. I would not be surprised if we come down and test this level. And if we get a weak, if we get a CPI number that is not favorable, meaning likely higher than expected, right? Which would postpone rate cut expectations more. Gold could go back to test 2560 even. In terms of momentum, it favors the sellers here. We had a huge sell-off, a bounce in the price of gold, but sellers came in very strong. And if we close like this today, price action is telling me that's a bearish looking chart in the short run. So I don't love gold right now. I'm very much on the neutral to slightly bearish side, which is exactly what the Edge Finder currently has listed for gold. It's getting a -2 score, which is a neutral score with just a very slight lean towards the bearish side. So I think, for me right now, if you're asking about gold, I'm not necessarily shorting gold, but this chart does not look very convincing for bulls. This looks really rough. So, we'll see. Euro yen, I have a small position on this one. I have most of my positioning is long the NASDAQ and long Bitcoin, which did you guys see Bitcoin? Bitcoin has been a crazy trade here recently. It's only got a +4 currently, but at one point it was giving me a bullish reading on the Edge Finder and I went long and I've just been trailing a stop on this thing. This thing has been a monster here recently. SP500, NASDAQ, both getting bullish ratings on the Edge Finder. So I maintain my bullish outlook for indices based on everything we just discussed. Again, economic data looking okay. The return of Trump is being celebrated by markets in terms of just strictly, lower taxes for businesses and less regulation. The stock market's obviously going to love that and has, just taken off. I think it was the best week for stocks last week that we've had all year long, despite having an incredible year so far. So, just a crazy week last week. But again, I maintain kind of staying bullish on indices and the Bitcoin world. I have positions on those that I'm just trailing stops. In fact, I probably need to see, this is tricky for me. I don't know what to do with my Bitcoin stop loss trailing. So I'm just going to leave it really loose. I know I'm taking on, the risk of this thing coming back, but I'd like to see this put in a higher low for me to find a way to really trail a stop loss on Bitcoin, because I don't know where this thing is. I don't want to just trail it here. If I was going to trail it, it'd probably be there, but I like the idea of just holding it loosely, letting some sort of higher low form, and then I could trail a stop. And if that means the market just completely reverses and I lose all my gains in Bitcoin, or a big chunk of them, then so be it. As a trend follower, someone who uses trailing stops, that happens to me sometimes. But I'm not going to trail this thing too tightly when I don't have a clear spot to do so. But yeah, we're looking at Bitcoin at 82,000, guys. That's crazy. The momentum on it is very strong. Yeah, I mean, I continue to like that trade quite a bit. I'm just trying to do as little as possible in this Bitcoin position, because I know, my rules here are wait for some sort of higher low to form in order for me to really justify trailing a stop. Because this thing could do something like this. It could just whip around and continue. And I really don't want to over tighten my stop loss. I want to wait for the market to give me that higher low to really trail that stop. Nick, can you add more trades on VIP channel since everything is moving significantly? Some of us missed out on your NAS and Bitcoin trades. Bilal, that's a great question, but I will say this: no, I won't, because when I share trades in the group, I'm not doing that so that other people can, take trades. I'm sharing exactly the trades that I am taking, and any sort of attempt to produce signals for the sake of producing signals takes away the whole point of the service. The service that we offer allows you to see the exact trades that I am taking. I'm not going to change any of my rules or my edge in the market to satisfy the idea of producing more signals for the service. Now, that being said, the whole point of the service is just for you to be able to see the trades I'm taking, and use them as insights, education. It's not a copy service. So I still like these trades, and they may violently pull back, or they may just rip higher and not give any pullbacks. And I don't mean that to respond harshly. I can't change what I'm actually doing in the markets simply to make the signal service more kind of active. That being said, I have several trades I'm watching right now. I have the Euro Yen trade going, which was going great and then kind of reversed on me a little bit here. Big pop here, and then trailing back down. So we'll see what happens on that. Let's see, what else am I in? I'm in the NAS trade, which has just gone parabolic. And this is what happens, in my trading scenarios. Most of the time I take entries, they stop out. Take entries, they stop out. Take entries, they stop out. And then every once in a while I catch the big runner here. And I went on a rant on Friday about that, just how I have several really good trades running right now that I paid for many times before this in order to get in. What I mean by that is several attempts where I got in, stopped out, got in, stopped out. So less is more, says Nicholas. That is exactly right. Like, there's, as much as, trading and placing a bunch of trades all the time sounds exciting, what I've found is the less that I actually can execute, the better I do. So if I get into good trades, the number one mistake that I've made is mismanaging trades, right? In my early trading, I wanted to take profits on everything as soon as it went green. And that was a big mistake. What I found is, for my style of trading and my fundamental and analysis that I do, holding trades and letting them run, improving that side of my trading has really helped to substantially improve my own trading performance. Because inevitably, if you're somebody who just takes profit every time you hit resistance, if you're long, or support if you're short, then you're only ever going to catch these moves, right? You're going to catch these little moves. Whereas if you find ways to let winners truly run, for me, my entire trading year has been made off of just a couple trades that went parabolic, right? Now, the thing is, I've said this on Friday extensively. In order for me to have these parabolic trades, I also have to get whipped out of trades, stopped out, trades that are very, very small profits or small losses over and over and over to eventually catch these moves, these more decisive moves in the market, right? They don't come often, but when they do show up, you know, you have to be ready for them with my style of trading. So step one, my trading style in a nutshell. Step one, look at the edge finder, use the watch list. I'm looking for bullish things. I'm looking for bearish things. Right? This is looking at the economic data, technical analysis, sentiment data, all sort of here. This is my first filter. I take trades that I find on the edge finder. So for example, like SP500, let's look at the Dow. Let's look at US 30 just for fun. So this is one that if I was looking to trade the Dow, step one would have been, okay, it's showing up on the edge finder as a confirmation. Great. That gives me the confidence to say, okay, most of our fundamental factors, like for example, commitment of traders data shows institutional buying seasonally. It's a good time for the Dow Jones, which we're clearly seeing today. Trend is to the upside. Okay, great. Then we take a look at some of the economic figures. A bunch of them are favoring, you know, a decent economy. So we look at the Dow Jones and we say, okay, this edge finder is giving us a +6. That's a bullish rating. Now what? Edge finder has done its part. Now I look at the chart and I say, do I like these? Do I like the idea of buying up here? Right? And the answer is no. I don't want to buy up here. But if I can get a pullback, right? If I get a reversal into this level of support and the edge finder still got that nice confirmation, that might be a trade for me. Step three. So we've done step one, edge finder. Step two, technical setup. Very simple technical look. Step three is managing the position professionally. And what I mean by that is, for me, I trail stops, which has periods of immense frustration and drawdown. And then every once in a while you catch a banger trade. That's inevitably how I trade. It's worked quite well for me over the years, but doesn't mean that it's working every day. There are periods where I'm just banging my head against the desk, like everything I'm entering, stopping out, everything I'm entering, stopping out. So let's say I get this trade and I put my entry here. It is very possible. In fact, most of my trades from there will stop out. Most of my trades, right? I lose trades probably about 50% of the time. I'd have to pull up the stats to see what they're at, but it really doesn't matter, because at the end of the day, your win percentage doesn't matter, right? What matters is, do you have a profitable system in the end? Because who cares if you take 9 losers and the one winner makes up for all of it and makes you profitable? Who cares what your win rate is, right? Who cares if you win 9 times and the 10th trade costs you your account? It does not matter your win percentage. It matters, does the strategy make money in the long run? So a lot of times this is what's going to happen, right? 3 times I'm going to take a loss. And then the 4th time, that's too big. Hold on. The 4th time, the market's going to do the thing. So I get beat up in the market, and most people psychologically, I understand this is really tense. Loss, 3 losses in a row. That will, if your position sizes are too big, will really impact you negatively. So my position sizes are really small so that I'm not getting destroyed when I have losing streaks, which are inevitable and guaranteed for me in my strategy. It is guaranteed that I'll have months that I lose money, perhaps even a year where my overall return is negative. It happened to me in 2022. Next up, what about the green scenario? What about when I hit it right? What I start doing is I start trailing stops as much as I can and as reasonably as I can. So what I'll start doing, step 3 on our process of the strategy, is that stop loss starts getting trailed into the green, right? Once every time it takes out the old high, I like to trail a stop, right? So I'm looking for higher lows and higher highs and just managing the position as it goes, right? So again, most of the time I lose small amounts of money in my entries. Now, you know what else is kind of frustrating? Sometimes you get a blue scenario where, okay, I enter the market and it goes in my favor and then comes back. Or blue scenario, it goes into my favor. I trail a stop. Hold on. And it does this, where I take a small winner, right? Because I trail stops to the higher low, and then I take a small winner. So that was kind of a tease. Like, okay, I've got all these losses piling up, and then I take a small winner. So my point is, most scenarios for me end up looking like the blue or red chart. The green scenario is very rare, and it's where I make most of my money. It's rare, doesn't happen that much, and I have to wait like a bear in hibernation for my plays to finally catch the big winner. Are we on the same page with this? Does this make sense? Is this making sense? If yes, type yes in the chat really quick for me. It's very important that we understand when I have big winners running in the account and I'm talking about them on live stream, you have to recognize that it's like a fisherman gone fishing and he finally catches the big one. For all the hours that he sat casting the line and getting nothing and coming home empty-handed, that's these scenarios for me as a trader. And every once in a while, I catch the big fish. So when you see me catching a big fish, right, trading, please understand there's context that's important. I don't win all my trades. Not all my trades look like this, right? I have some crazy trades on right now that are unique, rare, and I probably won't get them all the time. But I've got a really big winner on the NASDAQ running. I have a ginormous winner on Bitcoin. Are you guys like Bitcoin's going wild? But again, my point is don't get enamored by my trading style because it's not perfect. There are times where I just lose $4,000, lose $3,000, lose $5,000, lose $4,000, lose $3,000, make 25 grand, right? So there's that's what happens in my trading. And it's important that I disclose that when you see me have these big trades because they're rare. I love when they happen. They're the greatest thing ever, but they don't happen that frequently. So when you see me trading this style that I do, if you try and mirror it, it might not work for you because you might not be able to handle those drawdowns. I'm someone who it took a long time for me to start being okay with these styles. The high lose rate is not for the faint of heart because the losing streaks can be very painful, right? But it's something that I've accepted. I've accepted that I've got to go through winters and hibernate in order to come out in springtime. That is, I've got all the analogies for you today, but it's really important that we discuss that. Disclosure out of the way. If you would like to trade the same style as me and you'd like to learn more about that and you'd like to trade alongside me, all I can tell you is that you should consider joining us in the VIP room during our Black Friday 40% off discount. In the description down below, if you're watching this later, there's a promo code and a link. And if you're watching with us live right now and you'd like to join the Discord and see all of the trades that are being shared inside of the room, don't miss your chance to join us for the biggest discount of the year. All of these trades that I'm discussing were sent to our members. You can track and see every position that I take with full analysis and breakdowns, like this NASDAQ trade, the Bitcoin trade, my Euro Yen position. Everything that I'm trading gets shared in full context, full detail, and full transparency to members inside of our group. If that's something that you're interested in, send us a direct message. Now that I've fully disclosed my style of trading and warned you of the pros and cons to my style, if you are still interested, if you're like, I can accept that too, I like that style of trading, then I invite you to come join us. There's the link. If you send us a direct message right now, we can get you that Black Friday discount. It is mega discounted right now. It's our biggest sale of the year. So if you're somebody thinking about getting access to the VIP room or the Edge Finder, by the way, Edge Finder is also 40% off, and it's a one-time fee to get access to this tool. These trades that I'm in, from the start, you can go back and watch the live streams when I took these positions. They came from the Edge Finder. So with the help of the Edge Finder, I was able to spot these ideas and catch these sorts of runners based on fundamentals and technicals. I don't hide what I do behind a paywall in terms of like my strategy. I disclosed fully what I do with you guys here today. That being said, the tools that I use are not free. So if you'd like to get access to them for our 40% off discount, again, use that link we just dropped in the chat. We'll drop it one last time. If you missed it, you can speak directly to a member of our support team and they will hook you up with our Black Friday discount prices. So dollar index is up 0.6% here today, which is really strong. Dow Jones, look at Dow, up another 1% today. Bitcoin's up 2%. All I can say here is just go, baby, go. Bitcoin, to me, people sometimes will say Bitcoin doesn't trade off of fundamentals, right? Doesn't pay attention to the economy. It doesn't have correlation to, it just does its own thing, which I think is very important to disclose that is absolutely not true. Bitcoin trades heavily off of fundamentals and sentiment, right? If the crowd gets excited about it, obviously it goes crazy. If the crowd forgets about it, it goes crazy the other way. But also, fundamentally, the crowd doesn't just randomly get excited about Bitcoin. The crowd gets excited about Bitcoin when conditions fundamentally are favorable towards it. It's not coincidence. It's not just one day the crowd decides to get excited. The crowd gets excited about Bitcoin when the conditions look okay. To help illustrate that point, when people were really struggling the most, inflation was skyrocketing. What happened to Bitcoin? It dropped hard. In 2021, when everybody was getting stimulus checks and feeling great, what happened to Bitcoin? It went crazy. These are not coincidence. It's not coincidence. Oh, Bitcoin decided to go up during that time. No, Bitcoin went up during those times because things were the consumer was feeling relatively good. They were getting stimulus checks. Inflation wasn't gone crazy yet. People were relatively employed. And then things changed, right? People are still employed. That has held up pretty well. But inflation really took a toll on people. And that extra income or that lost purchasing power came right out of Bitcoin, came right out of the enthusiasm for Bitcoin. Things are coming back here now because inflation has come a long ways and the economy is held up. Jobs data is still looking okay. And the cherry on top here recently has been that, Trump has been vocally very supportive of Bitcoin. And of course, that's going to give it extra runway to just go crazy. I like Bitcoin on the long side. You should not do what I do. You should do what your own due diligence. I'm not here giving financial advice. I'm here sharing my own personal opinions. But for me, I like the upside here. I'm looking for higher lows to trail a stop. For the signals channel, is the fee a one-time or subscription? Florin, we have different options available to you. We do offer right now our one-time fee to join the group is super low cost. It is 40% off. So just chat with us if you have any questions about, we do offer monthly options as well. Just send us a direct message and we can hook you up with any information you need. Someone from our support team can help you out. It's a real person that you're chatting with, not a robot. Okay, guys, we've got Ivan joining the call here in just a second to share some thoughts on the markets. We're going to take a quick break, and then we'll be right back with Ivan just after this.
This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stock Box, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stock Box gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The Stock Box, the Edge Finder, Pulver Alerts, and the VIP Discord community, as well as our Trading View indicators, are all on sale for 40% off. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more with the link being dropped in the chat now. Again, 40% won't last forever, so take advantage of this huge sale. Stockbox, Edgefinder, Pulver Alerts, VIP Discord community, and Trading View indicators 40% off right now.
All right, we're back with Ivan. Hey, Ivan, how's it going, man?
It's going all right.
It's good to have you back on the show. And ahead of this big week, we've got CPI, PPI, we've got retail sales, got Jerome Powell speaking. It's a busy week.
Yeah. Isn't that just normal?
It feels like it. Feels like every week is crazy these days with elections and Fed meetings and economic data. And my goodness. Ivan, what are you watching in the markets today?
I'm watching I'm watching the top setups.
What you got on here? What are you liking on here?
I like that Euro Yen, Aussie Yen has a bullish bias at a score of 7. Because when I go and look at the charts, Euro Yen is currently giving me a small little discount. So I'm thinking, what about that tomorrow?
Yeah, that would be nice. I would be okay with that, Ivan. I've got a long position on Euro Yen myself. So are you going to join me? Or are you liking Aussie Yen more?
You will probably find me an Aussie Yen trade in the next milliseconds. But yeah, I'm with you on that one. Either current or back down there, but both are good. My only problem with Euro Yen, I want and I need it to reverse because all the other yen pairs are much higher and much stronger. Euro, CAD, Aussie, New Zealand, Pound. So Euro is the weakest one. Leading me to the next one, Euro Dollar.
Yeah,
it's falling.
I just pulled it up. That thing is really taken off to the downside here. 1.063. What are your what's going on? Why is the euro so weak?
I want to ask you that question.
Did they didn't have any data this morning, did they? No.
I think it's very simple. I think the math is simple. Can I just give you like a new theory here? I think that America was Brexited. If you know what I mean.
Yeah.
They have voted for a better economy, which in my terms means lower inflation, but they voted for Trump, and whatever he's going to do now, as presumably, as far as I've understood, increase or create tariffs, that's only going to create inflation and only going to make it much worse economy. And where is those tariffs going to come to is, okay, Europe is going to be one place, but Europe is trading with America, which is the biggest trading partner. So Europe is going to be one having a lot of toll barriers to tariffs to America, but Europe is going to create their own. So Europe is going to tank. That's why I think euro is going to go down right now.
Yeah, it would make sense. And a lot of the foreign exports that Europe, the UK, etc., does go directly to the US. And if those exports are, taxed at a higher rate, tariff, situation, that makes it tricky. That hurts their income. So could hurt GDP forecasts, right, for some of these places, making the dollar strong. And I think we saw something similar to this in 2018, because this isn't the first time we've seen Donald Trump as president, obviously, but we've also, seen back in 2018, there was a strong sort of surge in the dollar for some time. So I don't know. We'll see how that plays out. If there's a bit of a, dollar strength trend that's going to stick around for a little bit. It also very much depends on, for this week, the CPI, PPI stuff. Do you think we could get some hot prints for CPI? Is that possible?
Well, this is far into the future, right? So, because if Trump comes in, in January, then creates tariffs, I don't know if that's ready by that time, but if you say that they are effective by March, then from there out. And then Jake says the idea is to bring production back to America. That's a very good idea. if US production was the lowest cost of operating. So, and a third, something that John Deere has to bring back production probably to America. Also, John Deere is going to be so expensive with US salary that it's going to be unattainable. So the problem is with US production, America first, and anti-globalism is that currently with the higher prices that you get from China, the US price is even more ridiculous. So there.
Yeah, I'm very curious to see how it all sort of shapes up, but at least in the short run, it seems to be creating a lot of momentum for the US dollar. You also have, small caps roaring today, up 1.2%. These are a lot of domestic companies. So, as you mentioned, anti-globalism or America first, whatever you'd like to call it, in this short run seems to be really getting some domestic companies that could be involved in that manufacturing, et cetera, a little bit more excited. That being said, gold is lower here today. Silver, commodities in general, lower today. Look at oil down under 70 now. What do you think about this, Ivan? Does this help the inflation story?
That's a very funny, interesting. Well, okay. Okay, I'm just trying to create a story because there's two ways to roam here. There's two ways. There's technical analysis and there's stories. My story is I assume that the market has kind of lost trust that China is going to get back on. But if they're also going to send Europe down in terms of euro dollar, then oil should also go down. But this lowers inflation, at least pulls it lower. So this actually at this point of this time of today is creating like a drag down. So that's a very interesting thing because oil would go up with inflation, market goes up.
Yeah, no, very, very interesting.
That's interesting.
We'll have to keep an eye on that oil price because that is a big player, and a lot of people probably wondering, Ivan, why gold is taking out the lows here. I had a thought on it, but I want to hear your own. What do you think about gold here? Is it doomed to fall much further?
Do you remember when I sat over, was it Thursday, 7th of November? I don't know what day it was, somewhere after the election. And I said, since we dropped, it's going to continue dropping.
Mm-hmm. I do remember that.
So why? Or what do I think about it? I think that what I said previously is still kind of true. That whatever risk that countries or central banks had priced in is now going out. Dollar is increasing with inflation in itself going higher, at least expectation. Gold is actually supposed to go lower. So it's kind of like a mismatch of a lot of expectations going on and a lot of what do you call it? Yeah, a lot of expectations being priced in right now. So the fall at the moment is let it be.
Yeah. No, I kind of agree. I mean, the thing is, a lot of the catalysts have been sort of nullified to a degree, like the uncertainty about the election, and the weaker dollar story is just it's losing some ground here to the idea, as we just discussed, the potential inflationary pressures that could come over the next year, but also economic data is just not. I've seen several memes over the weekend just pointing out like the stock market's at an all-time high, employment is strong, PMIs look good, like all these things look good, and the Fed is still cutting rates. So it is an interesting time because Fed is seemingly cutting rates not to save things, but because it can, which is a relatively good environment to say the least. And a good environment is not super favorable to gold. Gold longs want turmoil. They want, or not necessarily want it, but they benefit from. Maybe they're hedging their portfolio with it, right? Some people buy gold just as they stick 5% of their portfolio into gold and just leave it there in case things go crazy.
Um, yeah, yeah, I would argue that gold benefits from it, or it's one of the drivers that everyone needs to be very, very aware of. Um, but in terms of Fed and Powell now, well, he said he's not going to be fired. That's pretty strong statement. But I think that what he currently has as his indicators, which is the economic performance, agrees with rate cuts. But the expectations going forward is, I would say, 180-degree turn. It is a U-turn in terms of expectations, and that's why we see dollar strengthening and all of that. So in that turn, he's not going to be caught, what do you call it, between a rock and a hard place, because what is he going to do? Short term or current terms we should cut, but then longer term we are probably going to have more inflation coming expectation wise.
Yep.
It's going to make his job a bit more difficult.
Yeah, and I also want to respond to Zoro's comment. Zoro, I had a lot of fun on NFP Day because 12,000 jobs was such a crazy number. But let's go through the labor data to give a fair, full look right now. Because yes, you had 12K, and that was a comically low number. But we have to look at the full picture, because you can't just say, oh, 12K, no jobs added, the whole economy just stopped. That's not very realistic. The economy doesn't just stop on a dime. Let's look at the full thing just for a second. The month before, we had massive jobs added compared to forecast. Really big beat. We did revise those numbers slightly lower, so that was worse, and jobs dropped considerably from what was forecasted. So if you only looked at this data point, then yeah, you would say that doesn't look like very good jobs data. But let's look at the full thing. We know rate cuts are coming, which are likely to stimulate the jobs market. So that's forward looking, but also ADP came in strong, right? Which is the private payroll sector. So private payroll. And also you have to remember there was a hurricane, right? So a hurricane, a substantial hurricane, huge hurricane, really pauses a lot of business activity, especially in Florida, which is a major contributor to the US overall GDP. Florida is like a beast of a state for our economy. So if they're getting hit the hardest by the hurricane, that does have a big impact. But also unemployment rate came down, right? It's actually looking relatively steady. Unemployment claims have not ticked up higher. So although there may have been a pause in hiring, we don't see a massive spike in unemployment claims. So that's also a positive thing. Job openings in the US have continued to slow, but they're getting back to levels that were sort of pre-pandemic territory. So we're not in crisis mode on that front. Wage growth in the US actually was pretty strong. So people are getting wage increases. This hasn't plummeted. So the evidence for where's the terrible jobs data, I think, is severely lacking. Yes, the jobs print 12K was hilarious and really low. I mean, not hilarious, but like really disappointing. But that's one thing. When you look at economic data, it's not as simple as only looking at one and drawing final conclusions. Overall, I'd say the jobs data looks pretty dang good, especially knowing we're going to continue to likely see rate cuts from the Fed. We may not get a ton more, but generally speaking, there's no massive fallout in labor data at this time. That could change in the future, but I just wanted to draw up some full context on that. Is there anything to add there, Ivan?
Good. Is it good? It depends on the eyes that it looks. Because, well, if you are saying that 12,000 and average is 200, somebody's not getting a job, or less people are getting jobs. Is that positive? But it correlates, I would argue, with or supports the idea of cutting rates to stimulate the economy. So it means that somebody has to have let go or not being given the opportunity to work. So it depends who it's positive for.
Yeah. So, I mean, that's the thing is context is important. It's hard to say that the jobs data is remarkable, but it's also hard to say that the jobs data is horrendous. So I think it's holding together decently well when all things are considered. So, yeah. Yeah. I mean, and, it's also for dollar strength purposes important to consider the state of other economies. What are other economies putting up for jobs numbers and things like that. Ivan, what charts are you also watching this week? Yen pairs you mentioned. Any Any other USD pairs other than euro dollar?
The silence. Also, if you take me, I say I would buy any dollar pair except dollar CAD of the big ones. So Aussie, Euro, Pound, New Zealand. Dollar yen we haven't talked about it yet, but that's kind of should have, could have, would have at the market open last night. But yeah, anything that goes higher with dollars kind of in my league at the moment, and I need a pullback. So if that's London Open tomorrow, then I'm very, very interested in euro, Aussie, okay, pound maybe. It's still, if you take pound for that matter, it's very slightly bearish. But if I'm going to sell tomorrow, I kind of need 125, 129.60, which is very far away. So something is gone, and yeah, so risk is high at the moment in those setups.
Yeah, it's in terms of currency world, I struggle to see anything that I really like more than the dollar at this time. What do you think about Bitcoin, by the way? Bitcoin is just going crazy. I'm making some money on this. I'm losing some money on NASDAQ today. So, we'll see.
You
But
crazy.
Bitcoin is just, what's it at? 80, almost 83,000. My goodness.
82.80.
You went all in yesterday on this, right?
Yeah. What is it? At 80,000. Yeah, I needed this one to go up. I mean,
You thought it was a good discount?
Yeah, it was a good discount. The all-time high, is it?
Yeah, right. Exactly.
Barely is actually. Nah, yeah. It's this is a story of does America has excess cash or not? That's what I call
very
crypto
true.
nowadays. And is there excess cash in the hedge fund world with ETF? So yeah, okay, cool. It's fine. It's all right. And when is it coming back down again?
Man, I wish I could tell you. If I knew when that was going to happen, I would take profits at the top. But I have no idea where this thing goes. But you said it very well right there. It's a story of how much extra money do people have in their pocket, because that, the young people of our generations are more interested in Bitcoin, it seems like, than gold, just from a standpoint of, American youth. I can only speak to what I am surrounded by. Everybody knows about Bitcoin that's my age, but people don't really care about gold. Now, I know that in other cultures that's different. In other places, gold, silver, like jewelry, like in Indian culture, for example, gold is very, very big for, every age group. But in America, gold is not really. Maybe a gold watch would be, or like gold plated watch would be kind of cool, but it's not really nearly as big.
Still
But everybody
tacky.
knows about Bitcoin. What'd you say?
It's still tacky.
You think it's tacky?
Well, gold plate, like a number plate in your car, for example, or
yeah.
on your house, that's tacky.
Yeah, I don't really have a bunch of gold that I like or wear, but to each their own.
To each their own. Or gold taps.
Well,
Okay,
sometimes
maybe
I do
a few
just carry
East,
around a gold brick with me, like a solid gold ingot, and I just carry it, in my pocket. Sometimes my pants fall down because it's too heavy, but
maybe I'm not rich enough.
But I can't really carry Bitcoin around, or can I? I mean, I guess you can kind of carry it in your phone. I don't have any Bitcoin on a ledger or anything like that. I know a lot of people do that sort of thing, but I'm just trading it. I don't have any super long term. Do you own any, Ivan?
What? Pants?
Pants, yeah.
No, I don't.
Okay. Yeah, no, it's a crazy one to watch. I only have trades on. I don't own any, but we'll see. And it's one of those things. It's going crazy on a day where the stock market's not even, up. It's just got a mind of its own. It was going up throughout the weekend. This was a Sunday move, which was crazy. I wish my whole account was just Bitcoin right now.
Yeah, but doesn't that go against your mantra though?
It does. And
It does.
I'm being a dummy for entertainment purposes. No, I mean, at the end of the day, this thing is super, super volatile, super risky. And
Yeah,
can reverse. I mean, these drawdowns, Ivan, are not anything to mess around with.
they're
I
not.
mean, let's look at just for fun. If you had bought at the wrong time in November 2021, which sounds like, oh, well, of course you wouldn't buy the all-time high. But during that time, it felt a little bit like it does right now. It feels like it can't be stopped. It feels like impossible. And then look, you would have been down 78%. And then you could easily just say, well, yeah, but then you just hold it and goes back up. But it's not guaranteed to go back up. It could go down and never come back up. So, that's where you have to be really responsible with this stuff. I am not, YOLOing my entire life savings on Bitcoin, but I do think it has momentum, and I like trading things that have momentum.
Yeah. And I think there's kind of, to explain the story, if you take the different stories here, is that back in 2020, we had, that's when we started stimulus packages, right?
Yep.
And then that lasted until June 21. And then from June 21, we started saying, well, we shouldn't do more stimulus. And then we started hiking interest rates about March 22. And then lasted until, when was that? Until what? 23 something?
Mm-hmm. Well, what's interesting is that goes perfectly with your theory of when did people have a little extra money in their pocket? Bitcoin went up. And when people no longer did because inflation, Bitcoin died. Keep it really simple, Ivan. You break it down so simple for us.
When should you stay in Bitcoin? Not financial advice intended. When people have extra money or when they're cutting rates or the rates are low.
It's possible too, Ivan. One thing to watch out for, and why I'm going to continue to trail a stop on this position that I have, is that what if the Fed pauses next year? I want to ask you about that. I've been thinking, okay, if the tariffs are inflationary, if Trump's return does mean the economy, jobs data kind of stays real strong or whatever, like let's say that those things happen. If that happens and inflation picks up again, because that's sort of a byproduct oftentimes of real strong employment, and potentially the tariff stuff. If inflation picks up again, what happens to risk assets? Do we go into, let's just say that next year the Fed signals a pause. They say, we realize we might be getting closer than we thought to a healthy interest rate, meaning we're no longer, going to cut. We're going to cut a little bit and just stop and wait. What does that do to the markets? Let's just pretend that's coming. How would you position?
I think that 1.0 is a very easy target.
Yeah, for the euro dollar.
And I would say now, if I can hold a euro dollar trade or Australian dollar trade against dollar from now, that's kind of what people should be thinking. And because what's the reaction? The reaction generally is, if you have analyzed it enough times, that Aussie, mainly, then New Zealand, then pound, I think, and then euro, and then CAD will all drop in that order. So shorting Australian dollar against dollar is kind of your best bet going forward, because when higher rates, higher US dollar rate, it hurts those who have the weakest economies, and also emerging markets. So yeah, that's a bearish emerging markets, bearish commodities, bearish. Yeah, those countries. China.
Very interesting. I mean, your point with the Australian dollar being the number one sort of loser, I guess, in that scenario.
Mhm.
Makes a lot of sense because, Australia, as you just discussed with the commodity side, is a heavy exporter to China, to other places. They have a ginormous country over there full of minerals, resources, things that they export. So if international trade does get sort of locked up a bit with the tariff situation, that very well could hurt places like this, where if China's unable to sell as easily to the United States, right, then there you might need less raw materials from Australia, so the Australian dollar might struggle. So very interesting breakdown there. And as you mentioned, a more emerging economy wants international trade to be doing, going crazy. They don't want the opposite effect to be happening. So that's very interesting. And I mean, it seems crazy to think euro dollar could go back to parity after all this, bounce back that we've had. But it seems very possible if you get the Fed starting to talk about pausing rates, which I think people are not expecting, but it could be a story in 2025. I mean, if you want to talk about what could get the stock market to go down 20%, my best guess would be the Fed gets neutral rather than cutting rates.
But Nick, as you see on your screen, why did euro dollar go down to 96.96? What's the story in 22?
Inflation.
Inflation. Isn't that what we're talking about? Isn't
Yeah.
that a reason?
See, this
So
is why
my
I have you on,
story-
Ivan. You're my coach. You're my coach too. I love it.
So I'm right. I don't. Okay, I'm not that right, but it's always going to be that you're going to look at inflation, but already now you have to write somewhere on the wall saying, going forward, if you see increased inflation, if you see tariffs coming in, if you see all those reasons that we are talking about now, this is not necessarily that technically falling that way because this is different drivers, but going down to parity is okay. It's a long shot and it's a bit funny to say it, and it's a bit YouTubey. But my point with it is it's a one-way train to whatever lower prices that is. It really depends how Europe, because I haven't noticed it, but I've noticed it in my head now. Europe is the scapegoat and is the one struggling in both scenarios, because if China and America both add tariffs,
Mhm.
and America does to Europe as well, so there's coming nothing from China into Europe because they are struggling, and then America does also not buy anything from Europe, so Europe is not getting anything from China, or
Mhm.
China's doing worse, nothing coming from China, and then nothing goes to America, and it's just that you would just lose both ways.
It's
That's
very
why you
interesting.
got a short one.
Yeah. No, I mean the euro, going down to parity. If some of those concerns are realized on the tariff side, as you're discussing with China as well, I mean those are scenarios that could really hurt the euro. So really good points, and keeping it really simple with that. If you get inflation returning, if that is a story, you've got to watch out for the euro, because that's probably a pretty easy target actually. If I, again, if we assume, if that happens, if inflation picks up, the US dollar is likely to look real strong, and the euro could go back to its function that it did in 2022, which is, that was very aggressive because they were hiking rates. But even just a expectation for rates to stay where they are could make the dollar look really strong relative to its peers. So very good stuff, Ivan. We got our next show starting here, so we're getting kicked out of here. But let me thank you for coming on, and also for everybody who's watching. If you guys would like to keep up with Ivan, he has his own YouTube channel. I highly recommend you go subscribe to that. Also, he does one-on-one coaching. If that is something that you're interested in, you can find him in our Discord channel. He's one of our lead traders in there. You can just find his username on the right. You can send him a DM, ask him about his one-on-one coaching that he does. He also does VIP webinars with us, so you guys can do all of that stuff. You can also find him directly through his YouTube channel and send him a DM there if that is something that you're interested in. Ivan, thank you for coming on the show today. Great conversation.
Thank you for having me.
All right. Have a good one. And guys, we got our next show host here, Chris Pulver, taking over. Going to be sharing some more insights and ideas with you. You guys know him and love him. He's pretty popular around here. So we got Chris Pulver coming in just after this quick break. Stay tuned.
Where are we going again?
I thought you plugged it into the GPS.
Oh my gosh, what is that? What's happening?
Relax. It was a Pulver alert.
A Pulver alert?
Yeah, you know, Chris Pulver. He teamed up with A1 Trading, and now you can see all of his trades, and it's all through Discord, so I can easily check them anytime on my phone or desktop. Plus, you can get notifications when new messages are sent.
Frank, that's really cool that you can see his signals, but why are you doing that when we're space traveling?
Because I'm bored and we have light years till our next destination.
Another trade already?
Actually, have no idea what that is. We might be in trouble.
Pulver alerts are now available on the A1 Trading website, and for a limited time, you can get them 40% off for the Black Friday sale event. Don't miss out on getting Pulver alerts for the best price anywhere in the galaxy. We're dropping the link to get Pulver alerts 40% off right now in the chat and the description down below.
Nick, Frank, you watching gold?
Roger that, Pulver. We got the alert.
Hey everybody, happy Monday, happy Veterans Day. Interesting thus far for the day. Things have been pretty quiet. Just grabbed a couple quick winners on SPX, added some trades into the Pulver alerts this morning for some hedges and a little bit of an oil trade. I did put a hedge on the MES out through the middle of December. Basically, I'm just looking to see, will we have a bit of a pause or a fade or a backfill on any of this election rip? I have an interesting screenshot to share with everyone. Let's see here. I've got those screenshots that I need. Here we go. So this might be a little bit difficult to read. Man, what is up with this StreamYard? I can't push to YouTube and Twitter. You sons of guns. All right, well, guess we're just doing it on A1 Trading. No worries. A couple things. I know the team will be posting some links. Nick and I will be doing a webinar tomorrow morning at 10 a.m. Please join that webinar. It's free for everybody, but you got to register for to attend. The prezo, the presentation slides look fantastic. We got lots of great stuff to talk about. I consumed lots of amazing content this weekend, so plenty of extra talking points. So what you see on the screen right now is the market actions after Election Day. This was from 2016 when Trump was elected to now 2024 being the new winner for this this new presidency. What we show here in blue, and I'm just going to kind of trace this out. In blue is the actual current trade. Okay, so basically we have the S&P. I'll just go if you can follow my mouse here. Okay, so we have S&P, U.S. equity versus the rest of the world, small cap versus large cap, bond yield, real yield, break-even inflation, 2 and 10-year curve, U.S. dollar, Chinese versus yuan, gold, Chinese equities, and Bitcoin. Now, the blue is how things have already started. So it's kind of one of those situations like how it started, how it's going. We won't know this until, the trade is done. We won't know if this is going to be the same thing. And, as we show like, okay, there was a Trump trade in 2016. Well, this is how it played out. Is there going to be a Trump trade that looks the exact same in 2024 to 2028? I have no idea. I don't think anybody does, but it's going to be interesting. So I thought we'd talk about it. S&P started out going up, and over Trump's administration, even through Biden's administration, it was the same. It went up. Bottom left to top right. Okay. Equities versus the rest of the world, however, the Trump trade from 2016, actually, the rest of the world outperformed the U.S., which is interesting. Okay, small cap versus large cap, up initially with small cap outpacing, and then small cap retreating. Okay, which I think is very similar to what we're seeing right now. Small cap, Russell has been ripping and outperforming. It's been pretty impressive, but I wouldn't be surprised if small caps fade, especially if we have a tougher time with rates going forward. And there's one thing that I'll be talking about a lot tomorrow. That will be the 10-year bond yield. That is going to be probably the most important financing fulcrum in the next 6 to 12 months, because I think that's going to determine whether or not the Fed will continue to cut or will pause or possibly backpedal into raising rates. It will be the 10-year yield. Okay. All right. Bond yields went up in 2016, stayed relatively elevated. Real yield went up, stayed relatively elevated. Break even inflation, which I would say this is one thing that's hard to decipher from 2016 to now, because we are in a very different environment. 2016, we had a trade war. We had a legitimate trade war, but we never were dealing with the same inflation metrics that we have right now. So it shows from 2016, break even inflation was up and then down and then back up, and it was essentially flat, but that could be a very different story this go around. The 2 and the 10-year, the 10-year actually got a little bit stronger, which means we get further and further disinverted, like we already have been on the 2 and the 10-year. The US dollar shows that it got stronger initially and then faded hard. The US versus the Chinese yuan, this shows inverted. So I'm not sure if that is dollar yuan inverted. Why wouldn't it just say dollar yuan? I'm just going to cross that one off. So if it's inverted, that means that the dollar got stronger versus the yuan. That's what that would be showing. Gold, initial reaction was down during Trump's election in 2016, and then gold rallied back. Chinese equities surprisingly went up, even despite a trade war. Chinese equities went up. Bitcoin went up. So we are seeing some similarities, right? We got some chart alarms going off here. We're at 60.33. Chart alarm is DAL at 62. That must be some fresh highs on Delta Airlines. Yep. I am looking at locking in some profit on my trade on SoFi. I've locked in a trade that's going to get me paid around $14.15. I have a $13 call. I just added this into my personal tracker today. I did a $13 covered call for an extra $1.15 today on all my shares. So if SoFi gets called away, it's $14.50, and I get back about $4,000 in buying power, and I'll turn a nice little profit on SoFi. Now, there's clearly some additional room to the upside. I've got this thing measured out towards $19. I should just sit on it, to be honest, not do anything. But just in case we get a pullback, if it doesn't get called away at 13, I'm going to set a chart alarm here at 13 bucks. Okay, this will be my covered call level. And what I could also do is by this, let's say Thursday, Friday, I might be willing to also roll my $13 call out another week or 2 or 3 and have it just pay me a little bit more. So I'm going to kind of finesse my covered call on SoFi and see if I can grab another, maybe 50 cents to $1. If I grab another $1, that makes the extra $300 a profit, and I'll keep working that out maybe another 2 to 4 weeks. Okay. Overall, P&L is looking pretty good on the day, hitting a new high again in the portfolio. That's good. 2 for 2 on the SPX today. That's also good. Bitcoin. We talked about buying IBIT last week. I did. Hopefully you did too, if you're interested. We have the dollar, which is going up. Okay. Now, could the dollar be facing some headwinds in the near term? Yeah, maybe. Okay. And this is what I'll be talking a lot about tomorrow. In fact, I'll save that prezo for tomorrow. So make sure to register for the session tomorrow starting at 10 a.m. And it's going to be a lot of fun. I revisited all the slides over the weekend. We got lots to talk about. But I'll get to that 10-year yield because I really think that's going to be one of the most important things moving forward. So dollar is up. Technically speaking, I'm looking at this DXY. I'm looking at this US dollar. Okay, let's say that the resistance is here, right? So post-election, I talked about this last week. If we have an election breakout candle, I'll just give you something very simple to go off of. So we take this high, we take this low. This was kind of our lead up into the election, and we're breaking above this. Now, I will say that the daily candle needs to close above that election high. Okay, so that post-election reaction high, if we close above that, all I'm going to do is this. Let me get into the nitty-gritty here. Let's take this election day candle, box this in right there. Okay, so there's my election candle. I'm going to stack it above. Because right now, if we hold this breakout, then there's 2 spots that I'd be measuring. Okay, if we have a complete fake out, then I'll put it right here at the bottom side. But what I'd be looking for is this. Let's take this breakout and go up to 2 targets. It's a 50% take profit, which would be around 106.30. So if you're long the dollar on this breakout, 106.30 would be my target 1. And if you're looking to finish that move for a full candle breakout, you're going to 107.19. Target 2. right? So the way I'd like to see that play out, and you can take this down to a smaller time frame. Let me put a couple of small trend lines in here. So I don't make this like super messy, but if I take a trend line there and trend line there. Okay, so that'd be my breakout point. Now, take this down to a smaller time frame. This would be the box that I'm watching closely. Okay, so if we have price breaking above, if it pauses and goes or breaks out, pulls back to this election high reaction point, and then bounces off of there, this is my 50% level. Okay, and then this is my 100% level as far as measuring the election candle. So don't be surprised if this dollar direction does continue. We hit this point. That's a good spot to take some profit or at least eliminate any risk. If you're long on the dollar, eliminate your risk, try to trap some profit. If it goes higher, continue to trap some profit into that full measured move. Once we get up towards 107 to 107.50, I wouldn't be aggressively bullish on the dollar. I would be looking to take all profit off the table and probably just trailing. Make sense? So I don't want my chart to get super messy, but keep an eye. I mean, look at how that measured move that I drew out here. Look at how that measured move would get us right back into these multi-year highs, right? Lots of resistance right back into this area. Now, if the dollar were to surpass that, I don't see it going much higher than 108. I'd say 109 to 109.50. Okay. And if we called a round number handle, I'd say 110 would be a spot that I would probably be aggressively looking to sell the dollar. But not there yet. I mean, right now it's like we've got our big election candle, a lot of noise, breaking out to the upside, measure your move. There's a 50, there's 100%. Get back to this multi-year resistance level. If it turns here, then we have an opportunity to sell going into the end of the year or even going into Q1 2025. Okay. So we'll see how it plays out, but that's my outlook on the dollar right now. Oil, we're at $68.17. I did put on a trade this morning on oil. I use CL to express that. It's a debit spread, so I did a 68.50 by 69. It's out to January 15th of next year. There's no risk. There's no risk assignment or anything like that. So if price just bounces here, then oil prices, stabilize. I get a clear like low risk off the bottom. I think I'm risking $230 to make $270. So if the floor can hold here, then there's a good chance by January this trade's fine. If we get a bigger squeeze to the upside, then we can take partial profit, and maybe in my max profit of 270, I can still close it out for maybe $150 to $200 and manage it. So I'll keep an eye on oil, but it's risk defined. There's no assignment risk, which is why I took the trade like that. Gold continues to drop. This is totally fine. So we're pulling back within. We're actually below the 50-period moving average on the daily time frame. Again, dollar getting stronger, gold getting weaker. That's fine. Why is gold dropping so hard? Doesn't really matter. I don't care. I still think gold has a good case to be long, but this is probably shaking out a lot of chasers at the top, which is why for weeks and weeks and weeks, I was saying I can't buy these highs. I can benefit from the melt up. Can't buy these highs. So I didn't, and I'm glad that I didn't. So now that we're back below the 50 period, I want to see, okay, do we come back into, let's just settle in at 100 period here. If we come back into the 100 period, I'm going out with a 2026 expiration. I'll put another probably 0.5 to 1% credit spread on this one and take the trade. So I may express this one on GC in addition to GLD. So look for that in my pulver alerts if we pull back to a level that I think is fairly attractive. So I'm going to put a chart alarm right here on this 100 period and see if price will just test it. Okay, is it linked to the dollar? I mean, there is a correlation there. It's an inverse. So if the dollar is getting stronger, typically gold is weaker. But we've been watching both happen. We've been watching dollar strength and gold strength. So it's kind of been a broken correlation. Now things seem to be kind of realigning. Okay, silver. Same thing. I'm just going to wait on silver. The next level I get in on silver, I'll be trading SI for futures and SLV. And I'm watching this area here. I still like silver to revisit my target one at 35.88. But I'm still long silver and gold. I still like both of them. Holy shnikes, man. Bitcoin is just ripping. Impressive run, that is for sure. up 25.5% since the bottom here. That would have been the bottom on November 4th. Wow. November 4th was last Monday, election on Tuesday, Wednesday open, and then this thing has just been relentless. I would say that 100,000 is in the cards. Part of me is like, I should just buy more. We've got another $16,000 to go, but I'm not going to. I'm going to wait. I mean, I built up a decent position. If I go to my exposure here, so IBIT, so IBIT is currently sitting up around about $23,000 on IBIT. If I go to BITO, currently sitting up around $14,000. If I go to, MicroStrategy, MicroStrategy currently sitting up around $7,300. So, I mean, I'm benefiting from the crypto run. Coinbase is another one that I'm in. I'm up around $4,000 there. So, I mean, it adds up nicely. I'm not going to lie. Between all those levels, it's like I'll be looking to manage some profit here. So Coinbase, let me go into an account here for Coinbase. So the 220 by 230, we have ripped up to 317. This trade is almost in full profit. I'm showing about $440 in profit, which I think the max profit would be about $600. Let me see what this is trading for right now. So my max credit would be $10. And at this point, I mean, if I flip this options chain, the expected move is now, I mean, even if we were to drop all the way back down, I mean, we're trading at like an 87 delta, 86, 87 delta, which means there's only a 13% chance that this price comes all the way back to not get us profit. So let me take a look at Coinbase really quickly. So, I mean, look, everything crypto is doing pretty darn good, right? So I'll just ask everyone in the chat, how many of you are long Bitcoin? How many of you are trading IBIT or FBTC or anything that's going to benefit from that type of run? Because, I mean, no joke, like it's pretty darn exciting, And some of the orders that I did, like BITO, for example, I just bought a call. Okay, the $14 call is up $700 right now. I mean, part of me wishes I loaded up a little bit more and took a bigger risk, but I think I was putting about 1% on the line for that BITO call order, and it goes all the way out to 2026. So with this type of move and how accelerated this is, here's what most likely I'll do on BITO. My goal was to take this trade and take some profit of BITO over to get back to the highs. Now, clearly, Bitcoin is ripping higher. We're well above that 73,800 high that we had before. And if we're going up to 100K, I don't know how high this instrument will be. But if we have a very aggressive run towards 100,000, I'm going to be taking some profit on BITO. So I will say this, if I can turn that call option, okay, if I can turn that call option, where's my BITO? Right here. So I do own some shares, okay? I have some naked puts. I've got some credit spreads. There's my long call. There's my long call as well. So I'll be watching those closely. Overall, position-wise up, this is per account. So, I mean, that's $2,600 in this account. There's 8 of those. And then the $14 call is up $700. If I get this one up to, I don't know, I'd say let's say $1,500, $1,500 in profit or more, I'll probably just start putting stop losses in and managing profit. So my goal is to try to make a couple $1,000s on that call option. If we get there very quickly, there's 2 things you have working for you. You've got delta working for you, and you have gamma working for you. Those are just the fancy options ways to say the direction of the underlying asset and the acceleration of that underlying asset. Because it's moving so quickly, those deltas just gain and swell in value. That gamma swells, allowing you to see those option prices be more profitable and just more profitable much faster. Does that make sense? So I don't think that even if Bitcoin crosses 100,000, I don't think that BITO is going to be back at the highs at 33.73. But even if we're back up into the, let's say mid to high 20s, it's still a pretty good trade, especially if we get there faster. The nice thing is with this call option, there's no profit cap. So the faster Bitcoin goes, the easier this thing runs into profit, and it continues to stay that way. Okay. All right. So thought that was exciting. MSTR. Oh my God, dude. Well, let me see something here. This would be absolutely insane if this trade is even offering profit right now, but it might be offering profit, which is a scary, scary move just because it's so fast. But who knows? Let me go to MSTR. I have a bunch of trades on here that are mostly income generators that I'm just going to let expire. I don't think there's any way that these ratio spreads, debit spreads, credit spreads that I have in MicroStrategy are going to come back and be, filled or exercised. So I'm just going to let them all go to full profit. And then the one I'm watching is a January of 2026 expiration. This one right now is it's already up about $100, and I took the trade last week. My max profit's like $1,100. So we're going to see. We're going to see what it does. But wow, what a crazy move. So, I mean, heck, if we make MicroStrategy rip up towards, $400, who knows? Who knows? But I don't know. Would it be surprising to anybody just to see this market care about nothing other than melting up? It's like get in while the getting's good before policy changes and things take a reality check and a turn for 2025. So I mean, I don't want to be too bearish here. It's like, look, there's no new administration. Even Trump taking control and even having the potential Republican sweep, like if you go to the US election, has the House votes been in yet? I think there's still a few seats left, right? 214 to 203 the Republicans only need 4 more seats to clinch the House, and they've got the Senate 52, right? So Senate's at 53. So Senate is Republican. President's Republican. That's a landslide, electoral college, and then even popular vote won 75 to 71. The House is still clinging, but a very, very narrow margin needed to see the Republicans also clinch the House. Now, is that good or bad? I don't know. I did say that the Republican sweep could be a potential issue. Just depends on what's going to be legislated. I mean, are we going legislation towards civil liberties? Are we going towards legislation towards social regression? Or are we going towards financial reform? I don't know. If it's financial reform, it might be good for the markets because in this administration, I would imagine it's better to lower capital gains taxes, lower tax breaks, things like that would be extended or lowered, and capitalism loves that. But if it's social issues, who knows? So we'll see what this race finally clinches. I think there's still like 29 outstanding races, but it's crazy how red this map actually is, and yet it's even close. It's funny how, I don't know, this is an impressive amount of, I guess you can call that gerrymandering. But anyway, we'll see how that plays out. So that being said, look, there's a lot of crazy stuff going on. Ethereum has been on a tear. My trade here, EETH, I should be able to get out of this one for some profit. Let me check on this one really quickly. EETH. I've got a couple of trades on this one. This was another one that's kind of crypto related. So let me just check the overall position. So EETH is up around $8,000. So I'm trying to think. I mean, I just rattled off some numbers there between EETH and IBIT and BITO and MSTR. But yeah, I mean, there's a lot of profits rolling. And the nice thing is if we're not at $100,000 yet, I'm probably not protecting many profits here. I'm just going to let it run, and I'll start getting more protective of those profits as we come into that 100K handle on Bitcoin. Okay, but what a run! What an impressive run, that's for sure. So let me see if I can max out this profit, EETH. So I've got a 50 by 40. I think my max profit on this one, I paid I collected 550, which means 550 is my max profit. I'm up 493. So what's the math on that? 493 divided by 550. I'm up about 89.6% of the max profit, and this is out to January of next year. I don't mind taking the profit if it will close me out. I tried to get this one filled a couple times last week. It wouldn't take the profit. So let me see if I can get this trade for, I mean, if I collected 550, I might as well just put in like a 65 cent. So if I did 550 minus 65 cents, I make 485 on the trade. I mean, I'm okay with that. Let me see if this will fill. Not filling. The bid ask is really wide. I guess more time is needed. Right now, my credit spread, $50 is on the very, very low end of the options chain. There's only about a let's say a 16% chance that price were to come back and get threatened. So right now, I mean, probability is pretty good that it just time works in our side. We don't have a blow up in crypto, and let's just see if Ethereum continues to gain. You know, I mean, technically, this. I mean, how clean does this look? Right? We break out here, so we break. If we pull back and we go, then we're looking to see if we get up to all-time highs. That's really all it is. So if we're coming or gunning for all-time highs, you know, my credit spread on EETH is going to be fine. So I mean, I don't think I have to do anything. There's no reason to micromanage it. So I think the crypto stuff, I'm just going to let it run. You know, it's working out really nicely. I should start setting some chart alarms though. I mean, let me set that 100K chart alarm. That's going to be the big milestone. So I'll set one at 99,000. Okay. And I'll set one here at 105. And there's also a way that this, you know, this is my measured move towards 10. It's like 108,000. Okay, 108,000. Now there's a chance if there's enough momentum in this thing, there's a chance this just, you know, goes ballistic and actually overshoots before we start having some pullbacks. And so, you know, if I'm in this area and I'm above my measured move, you know, anything in here to me is good enough. Good enough. You know, I'm not greedy. So if it blows through that level, moving stop losses, if price wants to keep going, moving stop losses, all that's good. You know, get rewarded for that extra surge. But if it, you know, hits the measure move and then starts to fade, I want to make sure that I'm at least trapping and protecting my profit. So yeah, it is very very clean. You know, and we've noticed this like really clean technical structure. That's one thing I have been very complimentary about on crypto trading is that the charts for Bitcoin, Ethereum, and mainly those two, those are the ones I've been following the closest. They have been very technically clean charts. So the efficiencies, the pullbacks. I mean, even this one, when we were running up, as we talked about the SEC approved, right? This is when the ETFs were approved right here. So we had the run up into the approval, the dip and the pullback, and then you had real order flows coming in, created a nice rip, a big inefficiency right there, and price came right back to it, like perfectly to it. And it's just been this big accumulation window. And now that we've broken out, just clean break, it's going, it's flagging, it's going, it's flagging. And if there's momentum here, the best thing you might get is bull flags. Like that might be it. It's push, it's pause, it's push, it's pause. And you might not get the, you know, breakout and retest that everyone's maybe waiting for. You know, you got a bunch of Fibonacci traders out there. They're like, okay, I'll draw my fibs and I'll start from the low and I'll get it here and I'll get it here. Well, there's no pullbacks. You know, if the market's going, like this move is already measured. That destination to 100K is already predetermined. So if the market's gunning for it, it'll backfill those inefficiencies later. You know, so I think the best thing you could do is you got some exposure, benefit from this run, and then see if price is going to continue to rip. Okay. All right. Let's see what else we have here. I do have, I mean, the market itself, I mean, it's pretty messy. Not messy. It's just good. It's like just good, quiet trading today. Let's see here. I mean, it's pretty tight. It is I mean, it's a holiday. It's Veterans Day, but our markets are still open. We do have, let me talk about this. We do have data coming on Wednesday that I think is going to be important. The forecast for this week's CPI is 2.4. Okay. I would be surprised if we print 2.4. I really would be. If we go into the Edge Finder, take a look at those year-over-year CPIs, you know, 2.4 would be the same as we had last month, right? Where we actually missed a 2.3 to print 2.4. Let me go into that inflation data here, go year-over-year CPI. And here's our Edge Finder. So the forecast is I'm seeing 2.6. I'm reading on the calendar here, 2.4. So this may have been revised lower. Okay, so the forecast I'm seeing is 2.4. We go to Bloomberg Terminal as well. And then we have PPI data, which doesn't have a forecast for this week. Why is that? I don't know. But there should be, but there's not for some reason. So last month we had slightly higher than expected inflation prints. The core and the month over month were slightly higher. The PPI came in slightly higher. The PCE came in slightly higher. Now let me spend just a couple minutes. Okay, a couple minutes on this 10-year yield stuff. So right now, the 10-year yield is down 22 basis points. Or I'm sorry, it's down about 0.22%. It's flat. Now, a good thing for this 10-year yield. if we want to see, and we talked about this before, if we want to see this like late cycle extension and we want to see this bull market continue to rip and have some legs to it, in my opinion, this 10-year yield has to go down. Okay. It has to go down. Think of this as basically the center point or the fulcrum of all major financing. So if you have a mortgage, it's going to be based on the ups and downs of this 10-year yield. Okay. If you are refinancing, it's going to be based on the ups and downs of this 10-year yield. If you're trying to buy a car right now, ups and downs of this 10-year yield. If you have a business and a building and you're renting, okay, your landlord having to restructure maybe a strip mall, that debt will be based on the ups and downs of this 10-year yield. Okay. Unfortunately, okay, because where's the Fed rate at right now? Where's the Fed rate? The Fed rate is all the way down to 4.25. Okay, which was what? Before September 18th was 5.25 to 5.5. So the Fed rate is down 1%. Actually, I think I'm okay. We're not there yet. We're at 4.5. My bad. December would bring us all the way down to 4.25. Okay, so the Fed rate, they cut rates down 50 basis points to 4.75, down another 25 last week to 4.5. So where's the official cash rate at right now? Let's go to last week. So the Fed cut to the window, to the wall. You get it. 4.75 is the official. Okay. So we went from 5.5 to 5 to 4.75. Looking at that window between, it's going to be like 4.5 by the December rate decision. Okay. That probably is still there. Here's the watch tool. December, so this has decreased a little bit. It was in the 70s probability wise. Now it's 65.5, but this is still targeting another 25 basis points by December 18th. Okay. Now this does likely coincide with this week's CPI, PPI, and the PC at the end of the month, as well as going into December. You're going to see November's data, CPI, PPI, PC for the end of the year, right? So I don't think this is going to change the Fed's outlook for the rest of this year. I think they're going to probably cut rates another 25 basis points. But that does bring the rate. I'll just type this out versus freehand it. So we went from a 5.25 to 5.5 Fed window to then cutting 50 bips or basis points September 18th. So that brings us down to 4.75 to 5%, right? And then we have a cut on November 7th, and that was 25 basis points. November 7th, which brings us now to 4.5 to 4.75. And then we're looking at another cut, 25 basis points December 18th, which would bring us down to 4.25 to 4.5. Expected Fed rate. Now, that's against 2025 Fed outlook has been reduced from another 1% of cuts to now 0.41%. Okay, so basically the forecast is cut in half. Now, I think this, if the US 10-year doesn't drop, the Fed will likely not cut after March 2025. Okay, so I would think there's going to be more of a pause. I think the last resort, would be Fed hike. And this, I think, breaks the market. Okay, now, not even when it happens. This would be like the buy the rumor, sell the news. If the market even believes for a second that the Fed is going to be hiking rates again, the gains that you've seen right now, the gains you've seen for most of 2024 will likely be hit really, really hard. Okay. So does it mean it's going to happen? No, but it's something we absolutely have to watch. On top of that, and we'll talk, and Nick and I get to talk about a lot of the stuff tomorrow for more detail. The US 10-year okay, versus the US 3-month. Okay, this is a 3-month yield versus the 10-year. It has been inverted. If this disinverts, it's an undefeated recession indicator. Okay, so we can take a quick trip down memory lane. I'll show you this chart. And I have it right here. So I've got the 10 and the 2-year, which is starting to, pull back and steepen. And there's actually a chance. And these are not bad things. Look, if we reinvert on the 10 and the 2-year, that's actually a good thing. Okay, this would show a tighter labor market. This would show that credit spreads remain relatively tight. This would be a good thing. This is how I think we have a late cycle extension, or even a late cycle, like we back it up into like, okay, there's more to run into this late cycle stage. I mean, at some point, like there's going to be a harsh reality check. Maybe things end very, very roughly. But if you've got cash ready to deploy, I mean, just make sure you don't lose your butt on the downside and just buy in when things are dirt cheap. But you got to have probably a 5 to 10 year horizon to do that. I mean, if you are at a retirement age right now, you should not be in these markets taking this type of potential risk. You should lock in your 4 to 5% cash free. And it's boring, man, but it's the safest way to trade it right now, where it's essentially risk free. So anyway, if we reinvert on the 10 and the 2-year, that's probably not a bad thing. If we disinvert, let me go back really quickly here. Let me just look up some dates. Starting dates for US recessions. See if I can find a list. Okay, let's look into the last, I want to go the last like 20 years or so. Okay, 1900s, okay, so this chart should go back. Go to the weekly time frame. This chart goes back into the 80s, I believe. Okay, so let's look modern day here from 82 onwards. So July 1981. Okay, I'm actually going to doctor this chart up. I've got a few minutes here. Am I good past 11 o'clock? I think I am, right? If I'm not, let me know. But I'm going to try to go another like 10, 15 minutes. And I want to get my chart marked up here because, okay, so we had a 1981-1982 recession. That was July 1981. July 1981. So let me put a horizontal or vertical line here. Vertical line, July 1981. I can't get there. I don't have enough data. Shoot. Well, it is getting into November of 82. So by the time we hit, so basically this was a recession. We're already in a recession. July 1981, we're already in one. So I'm just going to go ahead and mark it. Okay. So when this data starts, we're in recession. Cool. This was February. I mean, so we're already in the thick of this thing. We invert and then disinvert. So we're already in a recession there. Next one I have is July 1990. Okay, July 1990. Okay, so we are July 1990, we had an inverted yield curve starting in 89. July 1990, we officially start. Okay, so another vertical line. July 1990, we start another recession. Okay, so what happened? Well, we were inverted and we stayed there, and we disinverted, we reinverted, we disinverted, and how much longer? And this is what we're saying is like, this is an undefeated recession indicator. I'm not saying it happens immediately when we get disinverted. I'm saying that there is borrowed time before the market faces the reality of an upcoming recession. We have essentially manipulated away all recessions. COVID was a manipulated recession because it was a recession, because it was basically the world stopped, right? And then we stimulated our way out of it, and that bazooka lasted until late 2021, and then there was a tech reset and deleveraging in 2022, and then we kind of backstopped that one, and then we've had Mag 7 and AI that got us through this last little run to this expansion that's happened just now. Okay, but we have some time before the real. But let me ask you this: if you look at prices in July of 1990, I would imagine that prices aren't up, and then they drop. I would imagine that prices, before we even get to this point when we call it a recession, the stock market's already been dropping. Okay, so I just want to make a reference to that. So I'm going to just take a screenshot here. All right, I'm going to keep this up. Now let's go to another one. July 1990. That's July 1990. Weird. So this says July 19. Okay, I need to go one more. All right, so 2001. This is March 2001. Okay, so here's our 2000. We have our inverted 10-year in the 3-month, and then we get out of that. That is a March 2001. Okay, March 2001. Ooh, this one's really close right there. So as soon as we go from inverted to disinverted, within a couple of months, that .com bubble / recession that hit shortly after was almost immediately after that that disinversion. Okay, next would be December 2007. I think we all know how that went. Now, this was disinverted in May of 07, and then about 6 to 7 months later, we had our official recession mark. That's December 2007, right there. So we had some borrowed time, right? Now we fast forward February 2020. Here we go, February 2020. Okay, so we were inverted, disinverted. This would have been October 2019. Again, borrowed time within about 5 to 6 months, recession. Okay, now that was a short-lived one because it was February 20th to April 20th, or I'm sorry, February 2020 to April 2020. I mean, they called it a 2-month recession. Well, that was because of a global stimulus effort that pretty much bailed us out. And here we are, the deepest and longest inverted yield curve that we have ever seen. And yet it's like, does everyone think this is going to be good? We'll find out. So point is this, we're on borrowed time. If we get this to disinvert, we're on borrowed time. It could be 2 months, it could be 10 months, it could be 12 months. I have no idea. Nobody knows. But I would say that this is an undefeated indicator for 50 plus years. It's probably like that for a reason. You know, a lot of this market, you have to remember, there are people that trade these markets. There are people that program quants to trade these markets. Okay. History is going to rhyme, and it's probably just going to happen in much faster cycles. So I wouldn't be surprised if you have a recession shortly after this 3-month and this 10-year disinvert. But to what window? I have no idea, right? I mean, could it be like Q1 of next year? Maybe. Could it be we kick this thing into like summer, fall of 2025? Maybe. You know, is it? I don't know. So I'm not saying all this to say to communicate I know when this is going to happen. I'm just saying this is what I'm cautiously bullish about, because this could be big enough and ugly enough and nasty enough and fast enough with these cycles happening faster and faster. This could be something that could erase, look, this is the scary part about the market. Okay. All-time highs that have a 10% haircut, it's a lot of money, right? This little 10% pullback, in hindsight, it's like, it was a 10% pullback and it's higher highs, and then another, 20% pullback and it's higher highs. It doesn't, like, when the market keeps making all-time highs, it feels great because you're there eventually and you survive all those dips. But you got to wonder, like, at these all-time highs, if we have a 10, 15, 20, 30, 40, 50% correction, I mean, where does that put us? If we have I'm just curious before I go today, if we have a 50% correction, that would be like great financial crisis magnitude. If we have a 50% correction, how many years of profits are we going to erode? That's what I want to know. If we pull back 50%, okay, we are going to go back to basically the COVID crash. You're going to wipe away 4 years of gains with a correction. It's not going to feel good, right? But if this is a milestone that is ever achieved, give it 2 years, 5 years, 10 years. If we have a 50% correction, somebody tell me the numbers here. If we have a 50% correction, what is the upside to revisiting the all-time highs? What's your gain if you are investing and you get this, 50% correction? What is the upside from there to get back to all-time highs? What's your percentage gain? So if you're down 50%, what does it take to get back to that same high? 100%. So you want to find a way to double your wealth? Have the dry powder available, dollar cost average as this thing goes down. It's not going to be pretty. It's not going to be fun. I'll be positioning bearish and trading lots of options and doing my best to survive and hedging like crazy. Okay. But basically, it's just don't get your butt kicked. And then if we are average in here at all on discounts and we get up to these levels, there is a 100% gain to get back to these highs. So right there, there's a chance to 2x your money. So whatever you are invested, that is a massive opportunity. And unfortunately, it doesn't feel like an opportunity when everyone's running for the hills and everyone's going to cash and everyone's getting out and it's the same fire exit and everyone's jumping over themselves trying to get out of my way. I've got to get out of here. But longer term investors will just say, this is a spot to be in. It's going to need some time. Things are going to get nasty if and when it happens. Now we might never see a 50% correction, but maybe it's 20%, maybe it's 30%. It's still a good opportunity to be ready for corrections. Okay. All right. But it would be crazy to have that type of correction wipe away 4 years of gains. And I would promise you that if we have a nasty correction like that, it's not going to take 4 years to find a bear market. This bear market, I think, is probably building up to be, whatever happens, it's going to be one of the nastier bear markets we've ever seen. I do think these booms and busts we've seen a lot since 2018 have gotten bigger and badder and faster and nastier. And I think whatever is around the corner is probably about the same. It's going to be par for the course. It's going to be nasty. But look, we've got a lot of tools in place to prevent stuff like that from happening. I just think the sad part is if we are doing reckless government spending, reckless fiscal policy, and the Fed is basically going to be cutting into what they say is lagging data, when the bond market is telling us the exact opposite, that's where the break is, right? That's what we'll talk about more tomorrow. Okay, so it's just getting ready. This is a lot of my 2025, just in case. And I'm not going to be bearish necessarily, but I think it's wise to make sure that I have the appropriate hedges. Every 30 to 60 days, I've got to have something to make sure I can weather the storm and make sure I don't get beat up on any nasty spills. Okay, so that being said, sign up for the session tomorrow. I think most of you probably did, but it's free to attend. Just have to sign up, give us a registration for it. Looking forward to that. And then we'll talk more about pulver alerts, and there's good Black Friday stuff going on. Get your hands on the AI Edge Finder. Get your hands on the stock box. Pulver alerts are alive and well. We had a ton of winners over the last couple of weeks, and I put in some Forex trades. I put in some commodity trades today, some futures trades, some index trades. So we'll keep rocking and rolling. All right. Thanks, everybody. Until next time. See you later. All right, bye.
Attention. The Black Friday sale is happening now. You can get 40% off everything on a1trading.com, including the brand new stock box, pulver alerts, the Edge Finder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.